The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Hi and welcome to the COB. I'm Danny Akuye here with
Juliet Sarli, and of course we are looking at what kind of market momentum we have been seeing, and a lot of, I guess, rotation as we wait for this CPI print coming through this week, Danny.
Yeah, absolutely. I was just having a quick check of some of the sectors in the ASX 200 and all those fabulous outperformers, be it iTech, be it property. Well, they're all racing headlong into the commodity space, and today it was the time for iron ore to shine, wasn't it, Jules?
Yeah, absolutely. Iron ore at a 2-week high. We've been looking at this commodity rally. So those material players, really the outperformer today. The ASX 200 up 0.4%. Let's get to those three themes though, because we're talking about rolling rotation and really digging those commodity prices. That's an Andrew Gagan gag. He helped us out with that one. But you know, you've got gold. It hit a record for a seventh straight session. Iron ore, as we mentioned, and base metal prices as well, with copper at that 14-month high. So really, of course, a lot of demand from funds, but also what we're seeing in some of the economic data as well, with German industrial data quite strong overnight.
Absolutely. And just a quick glint, we'll get to the sectors, but just materials is up actually 1.4% today, which has really been the standout. But glum consumers, that Westpac sentiment continues to really flounder, doesn't it, Jules?
Yeah.
And yeah, it's basically ticked down again.
Towards a historic low, I think. And then the ANZ Roy Morgan one also showed, and I know that's only a weekly print, but more than half Australians that were surveyed are more worried about their finances now than they were this time a year ago. And I think 1 in 10 say that they're expecting better times ahead. The majority are saying, you know, could be worse times ahead.
Yeah, definitely those higher interest rates coming through in terms of we've got higher rentals, higher mortgages, definitely really biting into the consumer. And of course, as we've discussed so many times, the immigration numbers are really hiding that, because you bring in more people and obviously that nominally looks like everything's improving, but for people with debt, it's pretty grim.
Yes,
pretty
indeed,
grim. We want those interest rates cut, nevertheless.
May not happen, looking at some of that strong data we keep getting. But let's have a look at the sectors. BHP there, Rio Tinto looking good. And one of the brokers, was it Jefferies today, saying that Rio is going to benefit most from these higher iron ore prices. So it has certainly had a front running today. Fortescue South 32 also looking good.
Absolutely. And having a look at the REITs, so the other side of the market today was profit taking in what is effectively the more interest rate sensitive sectors of the market, which includes those REITs under pressure, with the exception of Vicinity and Arena.
Looking at consumer discretionary stocks as well, they had a good day. The sector up by about 0.8%. We've also got this call from quite a few of the retailers about the review as well. That is it, Woolies asking for Costco and Amazon to be included here too. Potentially a little bit of backlash, but look, the major ones all looking very good today. Wesfarmers up 0.6%.
And let's have a look at some of the top stories of today. And Ansell shares, they resumed trade after that raising $400 million in a placement. And of course, that was huge acquisition, almost $1 billion, to buy Kimberly-Clark's PPE division. A lot of it that's in the US. Fund managers getting very excited about that. So basically those shares up by 6.7%.
And I talked about the supermarket giants being in focus. Woolies calling for the expansion of the under review food and grocery code of conduct to include those international retailers like Amazon and Costco. Both Woolies and Coles lower, but we saw, of course, the consumer staples and discretionary sectors were higher today. And
Heartland Group fell by about, well, actually it hasn't fallen according to that. It's completed the institutional leg of our 192 million equity raise to buy Challenger Bank.
And change at the C-suite for New Zealand's Synlait Milk. Charles Ferguson appointed as Chief Financial Officer, shares down by about 0.9%.
And we are going to welcome now to the COB, Kyle Rodder from capital.com. Kyle.
Rugged up, Kyle.
Yeah, I am a little bit. I'm starting to regret the move, so here we go.
A bit freezy breezy down in Melbourne. I think it's a bit freezy breezy outside in Sydney as well. Is it really the case of just markets are really waiting for this CPI print and PPI print this week, Kyle?
Yeah, well, we've got a lot coming up really from Wednesday to Friday. I think you could see some sort of lower volumes coming through the market in Asia today, and I think in the United States as well last night. And effectively, as you noted, we've got that sort of CPI data out tomorrow night from the States. But I mean, the FOMC minutes is pretty much hot in the tails of that figure, and could sort of colour expectations for rate policy in the United States. But then the ECB comes on Thursday night. The Bank of Canada is actually fairly significant too. On Wednesday evening, and then we cap it all off with some bank results at the end of the week, with JP Morgan, Wells Fargo, and Citi all reporting in US trades. So, I mean, there isn't a great deal of sort of a directional bias at the moment for equities. Everything's sort of quite rangy and trading in quite a sort of a tight fashion. So I think, I mean, if you look at futures markets at the moment, pointing to a sort of slightly negative open for US markets, but for the most part, it really is just waiting for those catalysts to arrive. And in Asia, we didn't really have many of them today.
Well, indeed, and you talk about the exception of Chinese stocks, Asian markets were broadly higher. A lot of that on the back of this rally in iron ore. Just tell us what that move is doing to support the trends.
Yeah, well, obviously it's been pretty supportive of the ASX 200. The other, obviously interesting element of the commodity rally was there was a lot of strength through the rare earth stocks today as well. So, you always sort of look for a catalyst there. Perhaps there was nothing clear, but in and of itself, it could be something of a signal to suggest that, there is this kind of looming recovery underway, at least in some parts of the global economy. And this sense, discussed a lot in energy markets recently and sort of conveyed in energy markets, over the last few weeks is this kind of pick up in demand in Asia and lift in economic activity, which is naturally a sort of sign of confidence, or perhaps a signal as well of an improving Chinese economy. The question becomes, one, from an iron ore point of view, is this a little bit of a dead cat bounce because we have seen a fairly continued downtrend? The other question too is that if it is a bit of a trend reversal, how long can it potentially last? Because there's still some concern that, despite the fact that China's economy is improving, it's out of, a sort of a deflationary state. And another data point that we'll get in the next 24 hours is the updated price data out of China too, which will be sort of fairly crucial to get a sense of the health of its economy, whether it'll be able to sustain, with current policy conditions at least, the kind of growth to push to that about 5% growth target the policymakers have set. So for me, again, the commodity price action is less a reaction to a particular catalyst, maybe something of a signal and a signal worth watching. But at the moment, it's certainly sustaining the ASX 200, especially given the fact that over the last couple of sessions we've seen such weakness coming through equity prices just by virtue of higher bond yields, which of course in and of themselves is an indication of fairly persistent and robust growth across the global economy.
Kyle, we've almost seen a bit of decoupling with the Aussie market because of the commodities exposure doing better than the US markets. In the face of if we get slightly higher inflation or something, do you think that decoupling can continue as people continue to seek possibly, higher growth, inflation hedges out of the commodities?
Yeah, well, I mean, it's one of these things that has been discussed pretty extensively over the last few weeks, and pointed to as being a sort of a signal of a healthy bull market is that we have seen some signs of more rotation, at least in US equities recently, especially given the fact that tech companies are fairly richly valued. And there is this sense that maybe there could be some improvements in pockets of the global economy, which sort of justify taking money out of some of those really strong performing sectors this first quarter, which also or in the last quarter, I should say, which have also sort of been bitten a little bit over the last few weeks because of these unwinding of rate expectations. But certainly trying to take an opportunity to find some value in some of those more cyclical and growth-sensitive names, if you will. So certainly that's been a supportive factor behind the ASX 200 and maybe this rebound that we've seen back above 7,800 or whatever it happens to be where we close today. I think that the really interesting thing, though, and I think the more important thing will, of course, be those kind of more systemic macro risks that could emerge if we get a bit of a hot CPI print, or maybe even a little bit of a surprise from something like a central bank like the ECB in coming days, which is more or less expected to signal that, well, it's priced in more or less that the central bank will signal that it's prepared to cut interest rates as soon as June. If we start to see a bit of pushback on that, again, because there's signs of more resilient growth and more persistent inflationary pressures, although in principle that should be good for some cyclical stocks, I think that kind of impact of higher yields as well as the price from the pricing out of rate cuts could hit basically all corners of the market. But I mean, at the moment, yes, that rotation trade seems to be indicative of a fairly robust uptrend, but it still continues to depend on whether, obviously, central banks are able to cut interest rates and the timing of those interest rate cuts.
Kyle, let's just talk as well about the importance of what we're seeing in the commodities market. I note in your afternoon report you've touched on the yen, but also a lot of concern about whether or not we're at the cusp of a currency crisis in Asia or a currency war. Do you have any thoughts on that?
Yeah, I suppose a reverse, race to the bottom, I suppose. I don't know what you call it, race to the top, but obviously a bit of a contrast to where we were, pre-pandemic, when it was all about sort of competitive currency devaluation, and now we've got central banks, obviously mostly in China, in the form of China and Japan, trying to sort of lean pretty aggressively against their currencies, the PBOC sort of entering the market and selling US dollars reportedly quite vigorously. And you've got this 152 level, as you can see there, on the USD yen, which will be very, very crucial, and obviously runs the risk of breaking higher in the coming days if we do start get to see a sort of a hot inflation print and some hawkish FOMC minutes. Another piece of trivia, just in terms of headlines that hit the wires, the emerging market currencies as well, or emerging Asia currencies, are feeling the same pinch. The Vietnamese dong was at its lowest level, I think, in history. So again, the stronger US dollar, I mean, it has the desired effect, I suppose, of tightening global financial conditions unintentionally, and maybe there's potential knock-on effects. Obviously, it doesn't look systemic. It's indicative of a strong US economy, and the global economic backdrop is fairly robust, but it's certainly causing some headaches. And from a trader's point of view, the potential of a break higher through 152 for the yen could have all sorts of knock-on consequences through the G10 currency landscape. So it could be fairly pivotal, and kind of calls again on those sort of domino effects in terms of other markets and other asset classes as well.
Kyle, you're giving me PTSD from the Asian currency crisis when my job disappeared overnight, okay? Careful. No, I'm slightly joking. But you might enjoy this. Kyle and I always used to have this thing, Jules, of who could listen to the nerdiest, sort of brainiest brain out there in terms of podcasts and YouTube. So Kyle, you've got to go and listen to Jack Farley speaking to basically Russell Napier, who actually was the CLSA strategist during the Asian currency crisis, and he is talking about China and the renminbi and the yuan and the yen and changing monetary systems. So there you go. If you're feeling a bit nerdy this weekend, I have the podcast YouTube for you.
Yeah, well, I've got the glasses on, so feeling extra nerdy today. So I'll put it on the to-do list, especially considering the dreary and cold weather.
And if you're getting sick of Melbourne life, then maybe a podcast is going to warm you up, Kyle. Always great to chat.
Weeks, make sure it's warm for me.
Yes, yeah, come back. Kyle, thanks. Kyle Rodder from capital.com. All right, let's get you caught up on the the leaders and laggards. Yes. Oh no, the stock of the day. I'm jumping. Here we go.
Absolutely. And the stock of the day was Elders, and Ben Clark from TMS Capital and Rudy Philippek Van Dyke from FN Arena shared their thoughts on the call.
I'm going to say hold, and I kind of feel like when I had a quick look at the analysts, what they've done with their earnings numbers on the back of yesterday's announcement, it's pretty brutal. So they've taken about 35% off FY24 earnings, but 7%. So they're quite long-term downgrades. And, I've learnt too many times to be careful buying a company just because its share price is tanked.
There's one thing I don't have, that's FOMO. So share prices, as far as I'm concerned, they can rally, everyone can make profits, and I don't have to be there. Right? Yeah. So I never have to be there when something like Elders.
So you think, good on them, great, well done,
because,
had a run.
Because I think the fundamental misconception that a lot of investors have is to take on risk to make a return.
Yeah.
I think there's a fundamental misconception. It's about avoiding risk and not suffering losses.
Yeah.
Right.
All right, now we'll get to those after close leaders. The market has closed now. Chalice Mining off and on the board. Liontown Resources looking good. Elders, of course, we've discussed in detail, up by 8%, and Ansell 2 on that placement. Whitehaven Coal looking good with a 5% or near 5% gain.
Oh, absolutely. And some of the laggards today, Nanosonics, Viva Energy, Life 360, which had been on a tear yesterday, Brickworks and Fletcher Building, and all of those stocks off between around 2 and 4%.
And Brickworks might have been ex-div today as well, which explains for that one.
Yes.
Yeah. Let's have a look at the winners. Sorry, my brain. The winners in the small cap space today. American Rare Earths up 20%, Aeris Resources, Ioneer, Chalice Mining on the board again, and PYC Therapeutics.
And some of the small cap laggards, Calidus Resources, Coal, oh gosh, AV Jennings, my gosh, I haven't heard that one for absolutely ages. I didn't even know it was still listed. And Theta Gold Mines, all in the red today.
All right, well, we are on CPI and PPI watch later in the week, but let's have a look at what is in focus tonight. The US NFIB Small Business Index, French Trade Balance, and also I noticed WD-40 and Tilray have earnings tonight.
They do indeed. And let's have a look tomorrow, what is happening. We've got December quarter building activity, RBNZ policy meeting, Japan PPI. So again, it is going to be one of those data dependent and central bank weeks, Jules.
Absolutely. When is it not, I guess? But
exactly.
Today, on a good day, thanks to that iron ore spike, we really do have a lot of the material sector to thank for that 0.5% gain that we're seeing on the CBO 200. Where's the ASX 200 finished, Danny?
It's up about 35 points or 0.45%, 7,824. So back above that apparently magical 7,800 level, and obviously bucking the trend compared to the lead that we had from Wall Street.
Indeed, and of course you can catch up on all our interviews that you might have missed today on ausbiz. You were just saying you had a good one in the tech space.
Yeah. So basically a real or live tech person who they're part of the AI data center operations. They're worth about $9 billion. So Jeff gave me an incredible rundown of his company, Vast Data, and I think that's what it's called. It's definitely vast, and it may get vaster, I said, because they are looking at potentially an IPO. But if you want an insight from someone on the ground in the US, what is happening in that space, it's a great interview to listen to, because it really pulls apart how much money is racing and racing into that sector, which I think sometimes we get too confused by share prices rather than actually the enormity of change going on.
Yeah, indeed. All right, give us about 10 minutes to get that one up onto the website, but plenty others already there. ausbiz.com.au. We'll see you from 9:40 a.m. tomorrow Eastern.
Have a great evening.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible!
1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful!
It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.